On Thursday, the Nasdaq had an inside candle, and on Friday, we get confirmation of that with a breakout higher. However, BofA just triggered a sell signal. What does this mean for stocks? Should we be concerned? Stay tuned to the end because we're going to cover all the key levels for this week. Now, one of the many questions we got to ask ourselves, is the market going to go ahead and make an ABC pattern down, coming down, breaking this low here? Or are we going to see the Nasdaq go ahead and firm up, take out the swing point up here, form an ABC pattern up, and push stocks to new all-time highs as we are still waiting for Santa Claus and that Santa Claus rally? We come over and look at the fear and greed index. Right now, we're sitting at 45. We're over in the neutral territory. However, we're just over by a smidge little bit. Then we come over and look at the most recent investor sentiment survey. We can see this week the bullishness dropped down from 44.6 to 44.1. The neutral category also dropped down from 24.8 to 22.7. But look at the bears. The bears jumped up from 30.6 to 33.2. So does this mean that this is nothing more than a dead cat bounce and we're about to go lower? Well, first, if we come over and look at how the indices fared across the board on Friday, notice all four indices were in the green. But, as bullish as the market felt, especially when you look at this candle's close, you would have thought that we had more issues advancing than we did. We look at advancing issues versus declining on Friday. Only 51.6% of issues were advancing on the day. Now, when we look at the sectors across the board on Friday, technology was the big leader out there. We're going to talk about one of the reasons for that. When we come over and look at the 1 week performance, we can actually see energy was the big laggard. We look at technology for the week was just barely up, only up 0.1. So a lot of this pullback that we've been seeing recently, a lot of it had to do with Oracle, data centers, and everybody fearing the AI bubble. Well, now look, Oracle on Friday was able to actually gap up. Oracle closing up 6.63%. You see that article right here, Oracle stock sinks on reports, AI data center snag, putting rising debt in focus. However, on Friday, the reason the markets were going up was very simple. If we look right here, TikTok signs deal to sell US unit to American investors, including Oracle in Silver Lake. Now, this is going to be very good because with Oracle having so much debt and the fears of the data center, we all know that TikTok is able to generate a lot of revenue. This should be able to put more money into Oracle's pockets, and we can see that is exactly what the market is pricing in. However, are they getting it wrong? When we come down here and we look at this, and we talked about this on the live stream when Oracle was actually selling off, look at the low that we had right down here. As the market came right back down, breaking the low, making a lower low, look down here at the MACD indicator. We had a bullish divergence, and we're starting to see the market trying to firm up. Now, with Oracle, if you're long Oracle, watching it, wherever the case may be, some of the critical levels, one would be this minus development area at about 209.85. That is almost dead smack in the middle of that massive gap that we had to the downside. Then if we can break above that, the next area I want to watch would be right up here towards the gap fill and the high volume node at 221.44. Now, when we look at the S&P 500, notice we're really not that far away from all-time highs. We look at the Dow Jones, also not that far away from all-time highs. But then we see articles like this, and we got this news on Friday. University of Michigan survey sees current conditions in America as the worst in 47 years. And if you're wondering what I'm talking about, we look at the news that we had on Friday. The news on Friday was not that good. Existing home sales came in worse than expected. We look at revised consumer sentiment, came in at 52.9. They were forecasting 53.5, and previous reading was 53.3. When we look and we scroll this down here real quick, look at this chart right here. Notice where we're currently at within that survey. Here was Black Friday all the way back in 1987. Here was the 9/11 crisis. Here was the great financial crisis. Anybody that traded through that, for me, it was an absolutely dumpster fire for me. And then even the pandemic lows, we have never been at this low of a level. And what's kind of funny is the stock market is not that far away from all-time highs. Then you might start seeing articles like this floating around the internet. A stock market sell signal has been triggered at Bank of America. Here's what's next. Now, this article is going to be a little bit deceiving because when you scroll down here real quick, it basically talks about the Bank of America's bull bear indicator rose to 8.5 from 7.9, triggering a sell signal as it surpasses 8. So anything above 8 is a sell signal. with BofA's bull bear indicator. Now, here's where this article is going to get it wrong. Historically, the sell signal has led to an average of 1.4 fall in the S&P 500 over 3 months. We're going to talk about why that is here in just a moment. The signal was activated by significant inflows into equity ETFs, increased global stock market index breadth, and hedge funds reducing VIX futures length. Now, we scroll down here real quick. Here's the little graph that they're talking about. So basically anything over 8, it triggers a sell signal. But we scroll down here real quick and they basically lay this out. Going back to 2002 until the current time, every time that this has triggered a sell signal, let's look at some of the performances. Now, keep in mind, when we looked right up here, what did they say? They said we have an average drop of 1.4%. So as we're looking at this, here's the thing that was the most compelling to me. It wasn't necessarily the 1 month or the 3 month, but if you look at the 2 months, the 2 months had more losing periods than the first or the third month. Now, when you scroll down and look at the bottom, it says the average back test. Well, 2 months was negative 1.2. The 3 month was negative 1.4. However, let's not get carried away real quick because we can see a quick correction in the market where this turns into an ABC pattern down. That could take a little bit of time, maybe falling somewhere in the range of that 2 month mark. I went and averaged out the sell signals only on the down days, wiping out the times when the signal actually failed. So if indeed that sell signal is correct this time, the true average rate of fall, the true average decline over the 2 month period, not the 3 month, is actually 5.7. And like I said earlier, the 2 month ends up being more bearish than the first month or even the third month out there. Now, we have some other charts that are very compelling out here. We were talking about this chart over the past couple of weeks. We saw the Dow Jones, which is the chart on the top, versus the transportation index. We've been seeing the transportation index basically break out of this declining trend line, ripping on the way up. And the Dow Jones, we can see on the chart on the top, really is not that far away from all-time highs. However, we have some other conflicting charts we're going to look at here in just a moment. One of them is going to be, we look at the SPY versus HYG being high yield bonds. And notice we have a declining trend line in HYG. And this week, even on Friday where we had an up day, look at the HYG. HYG was not that bullish, which could be giving us a heads up, but that really is in conflict when we look at the Dow Jones versus the transportation index. Completely different. They're giving us two different views of the market. But then we come over and look at the 10-year versus the 2-year yield. This to me is becoming a little bit concerning. Notice we're starting to see the yield curve starting to steepen on the way up. Normally when we see this, it's problematic. It might not be tomorrow. It might not be the next day. But if we keep going up like this, most certainly this will be a problem that has to be dealt with sooner than later. Now, before we come over and look at the QQQs real quick and get started with our chart analysis, I want to let you guys know right now, Take Profit Trader, 40% off all evaluation accounts. Best yet, no activation fee. Take advantage of this offer. Use the link in the description box down below. Use promo code epitome at checkout. Now, we come over and look at the QQQs real quick. Notice we have a case where we have a high, we have a lower high, we have a low, and we have a potential higher low. Now, this is on the weekly time frame. You can see we actually formed a hammer candle. So early on in the week, they sold it down. They closed in the upper end of the range. And I got to be honest with you, that by itself does tend to be a little bit more bullish than bearish. Then we look down here at the MACD indicator, though. The MACD indicator does have a bearish cross to the downside. And I really want to pay very close attention because if we want to go ahead and draw some trend lines right up like this, we can make the case that we have a triangle-ish pattern. Now, with this triangle pattern, the closer we get to the right edge of that, the more likely we're going to break. Now, the question is, do we break out to the upside, start making new all-time highs, or do we start the correction down here just a little bit? If we look down here on the composite profile, we do have a minus development area a lot lower at about 543.36. We dive down, we start looking at the daily chart. Notice the MACD indicator kind of right there near the zero line. It does slightly have a bearish cross. Now, I'm going to go ahead and remove all these Fibonacci levels off of the chart for the time being, and let's just analyze where things are at. We have a potential for an ABC pattern on the way down, and this would be the starting point would be right up here at the high. We can grab the Fibonacci extension, measure the A to B leg, the B to C leg, and that gives us a price completion at 573.01. But something we've been talking about on the live stream would be that if we pull a Fibonacci retracement from the swing low right up here to the swing high, unless we start getting below the 78.6 Fibonacci retracement level, I really don't want to focus all the way down here for that ABC pattern completion. this is going to be my line in the sand while I'll start taking a trade down there. Now, if I do get involved in some type of trade, this at that point could be a runner target if I'm trying to get involved up here, if we start to get a turn up in that area. Now, let's look at another fib real quick, and that's going to be from the swing high right here, right down here to the swing low. If we start breaking the 78.6, which will be about 622.94, then I would expect the market to a minimum come back and retest this high. And at that point, probably work on a potential ABC pattern on the way up. You can see we have a low right here. We have a high. We have a corrective move. Now, if we were just to go ahead and measure and see how far did we actually retrace right here, we came almost to the 61.8 Fibonacci retracement level. So now let's go ahead and theorize and just see if indeed this is going to be an ABC pattern up, what would that price completion be? Well, assuming this low is going to be the low before we come up here and take out that high, we'd have a price completion all the way up here at about 648.91. Well, if we come over and look at some of the gamma exposure levels real quick, notice we have a lot of gamma exposure right up above us, anywhere from about 615 to about 621, 622 or so. Now, one of the areas I do want to focus on this week is going to be, do we hold the 610 level? If we start breaking that 610 level, then keep in mind, we have a lot of gamma exposure to the downside, like 600 right here, right around 590 or so. So if we look at where that is, we are currently 7 points above that 610 strike price, which is going to be right here, right about this area. Now, when we dive down, we start looking at a 30-minute chart. Notice on Thursday and Friday, we gapped up both of those days, and notice we did not come back and fill the gaps. Now, if we were to look in on this a little bit tighter, notice we have a distribution right up here on this profile. Now, I would classify this profile shape from Friday as a P as in Paul. And if we start breaking below the lower portion of that distribution, that really increases the probabilities we are going to come down towards gap support, potentially come all the way down, fill in the gap, and then we'll see if we come down towards the next gap support or even fill in that other gap. Keep in mind, if we look at where that 610 flip point is going to be, that would be at a point where we're almost down filling the gap. To fill the gap, we actually need to come all the way down to 609. So if we do get below that, keep in mind, we said the next strike price we want to focus on would be down here right around 600, and that would be enough to go ahead and fill both of those gaps to the downside. So it's going to be very important. Can we hold above the 610 strike price? If so, I want to give the benefit that we are going to continue to try to work our way up. If you're looking for a quick, aggressive short, then we can play right off this distribution area of the profile at 616. Anything below that, then like I said earlier, start looking for some of those lower prices. Now, when we come over and look at the futures markets real quick, notice where value area high is and the fact that the market was able to close above it on Friday. Now, if you've been tuned into the channel for any amount of time, you guys know I love it when the market either closes above value area high or below value area low. And the reason for that is it gives me a very clear line in the sand of a potential target location. So that value area high comes in at 25,517.75. So the rule behind that would be whenever we close outside of value, we expect the next 1 to 2 sessions, we will come back and visit that level. Well, since we're dealing with a weekly profile over here, one session would equal 1 week in time. So either this next week or the following week, we should at minimum come down towards this level. Now, if we can hold above this high volume node at 25,574, then one of the areas I'm really keened in on is going to be right here, this minus development area at about 25,673. And what I really like about that as well is that would also come back and retest this structural breakdown point. And let's not forget, we do have an untested point of control above us at 25,960.25. Now, in the event that we actually start rotating back down below value area high, then I want to target this point of control area and maybe even try to front run it a little bit. We can look for a target kind of in a minor minus development area, if that makes sense, 25,431. Then the point of control at 25,316 and a quarter, and then value area low at about 25,178. Anything below that, I want to retarget this high volume node at about 25,090. Then look for a retest of this week's low, and then anything beyond that price point, we're really looking for lower prices, kind of coming back towards this minus development area at about 24,563. Now, if you're looking for big moves in the market, especially to the downside, I would want to caution you guys just a little bit because we look at the economic calendar, we have really nothing on deck on Monday. On Tuesday, we do have preliminary GDP numbers coming out, core durable good orders coming out, durable good orders, preliminary GDP prices. And then we also at 10 a.m. get consumer confidence, followed by the Richmond Manufacturing Index. Then on Thursday, we have the weekly unemployment claims. And something I want to pay attention to now, this is going to be right around a holiday, but we're going to get the BOJ governor speaking. That's going to be tentative. And we'll see if that has any impacts of when our markets reopen up. Keep in mind, this week is going to be a shortened week out here. Now, when we come over and look at the daily volume profiles for the Nasdaq, what do we have on deck? Well, we kind of have that P as in Paul shaped profile. We close right near value area high. Now, on the daily chart, value area high comes in about 25,592. So in the event we start coming back down below it, there is a quick little target that could be had at 25,574. Then below that, I'd want to target value area low. And then kind of this structure breakout point that we were mapping out during the live stream on Friday, which the market failed to come back and retest. Now that structure breakout point would be anywhere from 25,412 down here to about 25,390. And just like we talked about with the Qs, if we can hold above this distribution area right here, then I really want to focus on the key volume profile levels that we spoke about off the weekly volume profile charts. Now, come over and look at the SPY on the weekly chart. We did form a hammer candle. We didn't close nearly as close to the high as what we saw with the Nasdaq. MACD indicator also has a bearish cross, but you can see we're on the verge of potentially making another new all-time high. And if we push above it, will it be a look above failure, or is it going to be the start of a next leg higher? We come over and look at the daily chart real quick. Notice we came right down, just barely miss hitting that 50% Fibonacci retracement from the swing low right up here to the swing high. And now the question is, are we setting up a little ABC pattern down? Meaning, is this nothing more than a dead cat bounce that rolls over before making a higher high up here? If so, we have the potential for that ABC pattern on the way down. Now let's go ahead and role play this out real quick. I want to grab my Fibonacci retracement tool, measure swing high right down here to the swing low. If we get above 685.61, then I want to look for the market to come back towards this high. Then I really want to focus on a potential larger ABC pattern on the way up. I'm going to mark this off for our A to B leg, the B to C leg being the corrective leg. And then we look at where that pattern completes. And that would be all the way up here at 709.50. That would then be enough to probably put the cash market above that 7,000 price point that so many traders have been watching. However, let's do a deep dive real quick and start looking at some of the gamma exposure levels. And notice right here, we had a lot of gamma exposure out here, right up there, right around that 680 or so strike price. And notice that where we closed on Friday, right there at that 680. Now, this is going to be very critical because if we can break and hold above that 680 strike price, where's the next high gamma exposure level? Well, the highest next gamma exposure level is going to be up here towards that 700 strike price. So it's going to be critical. Can we break back down below 680? And then the next key level is going to be, can we break and hold below 675? Well, if we look at where 675 comes into play, that is right near this wick on this candle right here. Still kind of within the edge of this minus development area. We break that, we're going down towards the next high volume node, 671. And we look at the gamma exposure levels. Notice to the downside, the gamma exposure to the downside has most certainly come off quite a bit. Earlier on in the week, we saw we had a lot of gamma exposure to the downside, but then with Friday's price action, we've seen that kind of dissipate out here. Now, in the event that we do start to turn back down, we can kind of theorize about where this ABC pattern could come into play. We'd have something like this. Let's say we come up towards this high volume node. Well, ABC pattern, if we were to able to make it right up towards 683.27 before rolling back down, that would give us a price completion about 665. But note, the pattern is not truly validated unless we break the swing low. And then one of the early entries we can use for this pattern would be grab your Fibonacci retracement from the swing low and wherever the turning point ends up being. If we go ahead and map it out where we just suspect maybe we come up towards, then anything below 673.74, I could then look to target the swing low, then that ABC target to the downside. We come over and we start looking at the 4-hour chart, MACD indicator, kind of by the zero line. Looks like it may want to turn back up. And on the 30-minute chart, this is a little bit troublesome because we have the MACD indicator trying to roll over. The lines are just on the verge of potentially crossing to the downside. Now, when we look at the volume profile shape, we have a P as in Paul. If we get below really this distribution area, anywhere below 678 or so, highly probable we're going to come back, revisit the lows on Friday. And let's not forget that large gaping gap that we have left behind from Thursday. Now we come over, look at the weekly volume profiles for the S&P futures. We can see 6890.75. We just barely closed above it. Now, in the event we come back down below it, I would want to target the weekly point of control, 6879.75, and then right down towards this minus development area, 6871. Anything below that, we can target any of these other high volume nodes on the way down. But just note, if we're trading above value area high, we're likely going to have further upside testing. I don't see any real significant volume spikes out here on the composite profile I'd want to target. So instead, one of the things we can do is grab a Fibonacci retracement from the swing high all the way down to the swing low. And the next stop, if we hold above value area high, would be right around the 61.8 Fibonacci level, 69.05. And then I'd want to turn my attention towards the 78.6 up here at 69.41. If we break and hold above that, we guys know the routine. We're probably going to see the markets making new all-time highs. Now we look at the daily profiles real quick. On Friday, we did barely close above value area high, 68.91 And I do like this distribution area of the profile. Now, if we can get back down below it, we do have a structure breakdown point I would be interested in, but I do not want to focus on this area unless the market can get back below value area high. Now that swing point I'd want to test would be 68.54 but not until we get back below value area high. And then we'll probably take out the point of control and even value area low. Next week, the liquidity is probably going to be dry, so maybe we'll see some outsized moves in the market. And if you guys trade with prop firms out there and you want a way to support the channel, don't forget to check out the affiliate links in the description box down below. And if you guys want to learn about when My Funded Futures will move you from a sim account to a live account, then you want to make sure to watch this next video right here.